All right, guys. Well, hey, have a great interview and a great Monday to everybody.
Yeah, you'll like this guy. It's what you could do with all your FX profits to diversify. So, Kirk, welcome to F.A.C.E.
Sounds great.
I'm going to make you a presenter now. Looking forward to hearing your voice, seeing your screen, and thank you so much for taking time out of your day to address the F.A.C.E. community.
All right, how are you doing there, Dale? I'm actually pulling up the screen right now.
Thank you so much, Kirk. How are you? Two of my partners are from Greece, and they're guessing you're second generation Greek.
No, my daughter dates a Greek guy, but no, I'm actually third generation Italian.
Oh, okay. See, the other island. Okay.
Yeah, right down the Mediterranean.
Okay. All right. So I saw what you emailed me.
Right.
And it looks like a great PowerPoint presentation. I'd like to start off with this. You know, our bailiwick is currency, and it's really speculative. And I was always taught, because I had a Series 7 for a while, that what you do with speculative capital is usually only about 10% of the pyramid, that you use leverage and you're aggressive and it's speculative. It's risk capital. So if it goes away, it doesn't hurt you. But the flip side of it is if you're doing well with your spec investments, that you can move profits from your spec investments to things that are lower on the pyramid, like equities, like mutual funds, like bonds. And I thought it'd be a great idea to educate people, FX fanatics, and I'm sure everyone here, their retirement money isn't all in trading. I'm sure they're in mutual funds, and you know, maybe they have pensions. So I thought it'd be great to have a guy like you, who's a top-ranked performer, address us. And you talk to me about a few of your styles. But first of all, how did you get into the business?
I was going to be a lawyer, and I decided that was too dirty, so I got into finance.
Okay.
There you go. There you go. You got the joke, right?
Yeah, so you don't have to take quite as many showers being in high finance, Kirk, but my mother was hoping I'd be a lawyer or a doctor. You know, most American parents hope that for their sons. So how did your family embrace your decision to go into finance?
My family's always pretty distracted, so you know it was all good. I do have an uncle who has you know, built a $1 billion firm. I'm on the other end of that scale. I like writing the investment letter, and I manage money for about 65 families, and I'm very happy just doing that. Okay,
so is it an RIA structure that you're managing people's money?
Right, fee only, RIA. I actually gave up my Series 7 license back in 2010, so it's you know, yeah, no, at this point, you know, what's the point of being FINRA registered and paying all those fees and having the extra audits? You know, I'd rather.
Or how about this, Kirk? Or how about this? You know, if you had a commission-based client where they could trade for almost zero anywhere, but still want full service retail service from you.
Right. So I do a lot of consulting. I actually have much more money that I consult on than I actually manage. So the money I manage is, you know, middle-class folks who, you know, just don't have any experience with it. But I probably consult on, you know, well into the 9 figures. Okay.
So why don't you start moving through this presentation and tell us what you're telling them along with the presentation in this current environment of a market that is so Teflon that even special prosecutors only take it down for a day.
Right. So I guess I have a question. What can you see from my screen right now?
intelligent and enterprising investors.
All right, so that's the green you see?
I think the gist of it was tactical against something else from what I read earlier. Tactical
Right.
Go ahead.
Right. So, I focus on asset allocation with most folks just to make sure that they have some concept of what they're doing. Derived it from the intelligent investor, which, is one of the Bibles of investing. Broke it down into an easy way to wrap your head around it. And, for most folks, having an asset allocation approach is going to probably be what saves them from some of the big market crashes and gets them involved in some of the better parts of the market. So I go over that first just to give people a baseline. I know that your group is a lot more sophisticated, so I'm going to just very quickly breeze through that.
But some nice endorsements for you there, Kirk.
Yeah. No, this is what I'm showing here is Tip Ranks, which actually Elliot Spitzer is a partner in that company. So when you said special prosecutor, I thought you meant they were chasing me again. But
okay.
No,
Elliot Spitzer chases other things.
Right, there you go. See, I surf up softball, so I've done this a few times. But it's an interesting algorithm that they have. I didn't know it existed until about a year ago, but they've been tracking me since 2011, and apparently nice. I'm all right at this.
Congratulations.
Yeah, these are.
You sound like Sally Fields after she won the Oscar.
Yeah, right. Hey.
They really, really like me.
Yeah, right. They like me.
And that's a great return. I tell people that hedge fund managers do cartwheels, 25% annual returns, because a lot of people really get locked into some of the hype,
right?
3-digit returns in a year and so forth, and FX trading. They also blow up trying to do it, but nothing wrong with 25 when you take in compounding.
Right, and so this is 2-year rolling returns. So the problem with Tip Ranks or anything else that measures people online is that, I'm making recommendations to people who are managing money, and I don't publish an article for 2, 3, 4 weeks later, maybe a couple of months later after I've bought something. So you do have to take these numbers with a grain of salt. The reality is that my investors generally get in earlier than what I'm publishing, so their results are generally better. And so that's really an important concept. But I know that a lot of your people are swing traders, and yeah. I'm a position trader, but that has a lot to do with being an RIA, right? So because of the regulatory oversight, being a swing trader is tough. So I do the position trading for people, but I use a lot of the same techniques that you use, and we'll get to that in just a minute. So I'll breeze through the asset allocation part very quickly. Ultimately, we're looking for a margin of safety, right? Same thing that you're doing. You're looking for ways to stay on the safer side of being an investor or a trader, whichever way you're going there. And I think that most people need to really focus on this, because especially the young kids, the millennials, I'll tell you what, I've been in day trading rooms with them. I've been in swing trading services with them, and they're ruthless traders. They are. They want to make money. But I think that they put too much at risk a lot of times, and I think a lot of it is because we've been in a bull market. I don't think they understand what a down market is. I don't think they understand that market structure is in such a way right now that it's not a big deal for us to have a flash crash, and it might not be like August 24th, 2015, where the market dropped 9.9% in 20 minutes and then rallied almost all the way back within 2 weeks. We might get a situation at some point where the market drops 9.9% one day, traders push it back a little, and then it goes 9.9% down the next day. And the reason I say 9.9% is because, as you know, the way the circuit breakers and whatnot work, awfully tough to have more than a 10% down day, but that doesn't mean that we couldn't have several in a very short period of time. And
what makes you say that about the structure, that you think it's, a possibility? You mentioned market structure.
Right.
I've heard people talk about it. Is it liquidity issues that everyone's on one side of the door? The banks are not, we're most likely not going to have a systemic risk from the banks because they've deleveraged. But could margin debt be a reason why you're talking about this? I think margin debt at multi-decade record highs.
Right. So margin debt's an indicator, right? That tells us that there's people who are stretched out. But when I talk about structure, I'm really talking about the way that money gets into and out of the market at this point. And right now, because of the, pardon?
Passively through ETFs?
Absolutely. That's exactly where I was going with that. The indexing approach that people have taken with huge sums of money, and the way that investment advisors move money using some of the overlay or third-party asset managers is dangerous, and they don't realize it. The investors don't realize it. The investment advisors don't realize it. And when there's a shock, they're not going to be ready for it, and they're just going to throw in the towel and say, well, the market went down and that's just what happens. So, you have to be aware of that. And there's warning signals. There's warning signals to 2008. I was basically out of the market before the big crash in 2008. I was giving seminars telling people to sell real estate and stocks and getting laughed at as they eat the steak I bought them. But,
Are you seeing any now?
I don't think we're at risk of the big one. I think the big one is several years down the road, to be honest with you.
Okay.
However, I do think that's good news, right? But I'm projecting basically a double dip recession over the next 3, 4, 5 years. And I think the first one will be shallow. I think that'll just be a bit of reversion to the mean. It'll be letting some air out of the bubble. And then you're going to see it really get pumped up once we do tax breaks and do a little infrastructure spending and start pulling growth from the future forward. And when you pull growth from the future forward, which is politicians are apt to do, you leave a hole in the future. So I think in the short run, right, you always leave a hole in the future if you pull tomorrow's growth to today. And that's what President Trump and the Congress are talking about. In my opinion, and I know this, I know I'm supposed to stay away from politics in most discussions, but in my opinion, if they copy the policies of the early 2000s, we'll just get a repeat. I mean, why wouldn't we? So, that's really what I'm concerned about. But I think that in the shorter run, if we get some of those event-driven corrections, we really ought to be thinking as investors that want to buy those dips. So, getting back into the asset allocation, I have it broken up in the same two categories that Benjamin Graham did. Intelligent investors, a little bit more conservative. Then you have your enterprising investors, which I think are your group. And very simple ways of doing asset allocation. Pretty much always have a quarter in equities, another quarter in either alternatives or equities. Then half the portfolio is moving around based on market characteristics. And think about this as if you weren't sophisticated. If you were the 90% of people out there who are just putting their money in because they know long-term that's what they're supposed to do somehow, this is a good guideline for them. And if they simply do one little thing, they keep their core equities. This is an intelligent investor would have the fixed income. You start getting tactical, and you just ebb and flow back and forth between heavier in equities and lighter in equities, depending on where the market is. I think that the average investor, actually I just found a typo in here, I think that the average investor really ought to be close to 75% in equities right now. you know, the more conservative retired person, maybe 50-50 portfolio, give or take, just because having the short-term fixed income or the alternatives and the cash at the moment probably makes some sense going into the cyclically slow period of the year. But really, without many bad economic things on the horizon short term, you know, you do want to err on the side of being invested. So it becomes a matter of where do you look, right? So if you're looking for investments, you know, told you I breezed through the asset allocation quick. I don't know if there's any questions, but if there is, throw them at me. I can't see what you're seeing.
I'm looking, yeah. I'm looking. Nothing yet. Go ahead.
Okay. So what that really moves me into is this core for investing. And here's what's super important for the swing trader. I know that you're using quantitative measures and technical measures. I do too. However, when I do a trade, whether it's something I expect over the next several months, because I will trade options, I was trained by a guy that helped write the Series 7 test on options back in the 1970s. I've had a good mentor, and so I will do some swing trades on positions that I'm intimate with. The most recent one that I've been in, and I've actually been in this company for 9 years now, is Exact Sciences. I bought it when it was about $3 back in 2007, end of 2007. Quadrupled down on it when it got down to $1.65. It actually went under $1 for a while. And I've been riding it all the way up to $30 and trading the options around my core position for 8 years now. And because I understand the company very well, and I have the ability to use quant analysis to figure out price trends, and I'm really most interested in cash flow.
So you've been selling calls against it at times for income?
I've only done it one time in the last 4 years have I sold calls.
Okay.
What I normally am doing is I'm selling puts and doing a synthetic long. So I sell the puts. Okay. Because you look at that chart, and with one exception, it's been very constructive, and that was a freak regulatory.
Can you scroll down so we can see that chart? Scroll down.
I don't have that chart in.
Oh, you don't have it? Okay.
No, but you can pull it up anywhere you want to pull it up. The symbol is EXAS. Pull up the last decade, and you'll see, you know, with the exception of one big dip about a year and a half ago, which was driven by a regulatory ambiguity. It wasn't even a bad decision. It was just somebody wrote something that nobody understood. You know, I've done very well. But what I will do...
Preference of biotech, Roderick's asking a preference to biotech over just tech, internet companies, internet security.
No, actually what I'm known for is as an analyst in the energy sector from MarketWatch.
Okay, well, and that goes to another one of Broderick's questions. How do you view oil service companies going forward?
Okay,
like
well,
Halliburton and McDermott.
All right, so I'm not a fan of Halliburton on the fundamental side. That failed merger with Baker Hughes is going to be damaging to them for a while. That doesn't mean it can't trade up. I'm just saying that the fundamentals aren't behind it. Really drive the stock in that field. Oil services, love Baker Hughes. They got that big payout, and their business and their technology are just outstanding. And then Schlumberger too, but Baker Hughes is my favorite. I'm actually writing an article. I'll finish it today, and I'll have it up on Seeking Alpha tomorrow. My clients already know about it, and the fundamental trend subscribers already know about it. XES, just the Spider Oil and Gas Services and Equipment ETF. That is a pretty cool ETF. You know, it's more even weighted, so you're not overweighted to the big three, Schlumberger, Halliburton, and Baker Hughes. You have a more even spread across market cap, and I think that's important with oil and gas services, because one way or another, you're going to see oil and gas services just do very well in the United States. It doesn't even matter if oil prices stay the same. Now, I think oil prices are going much higher in the next 2-3 years, and I have an article out there with 5 reasons why. But the oil and gas services, you know, you can point to Trump wanting to push the industry. You can point to the fact that $1 trillion of deep water and oil sands projects have been canceled. So the companies that are intimate with the shale industry are going to do really well, even if the E&Ps stagnate. So there is a pretty big reason to see oil and gas services go
Were
up.
all those projects capped because of what happened last year and a half ago, and they're not coming back? Or is this a recent development?
No, that's from the last couple of years. So
okay.
There's over $1 trillion of deep water and oil sands projects canceled through 2022.
Okay.
And now that the market is basically balanced, I mean, the market is pretty much in balance. Oil supply and demand are about equal.
You can tell by the chart, the defined $10, $12, $15 range all year.
Right.
What's your view on the fact of the Saudi Aramco IPO? Do you believe that the powers that be will keep, and you're constructive on oil prices anyway,
right.
but do you think that's a factor in keeping them elevated until this IPO is launched?
I think that there is a wild card that everybody's ignoring that's going to make Saudi Aramco one of the absolute best investments you can trade. I think, you know, and I was a geopolitical analyst in another life. I'll tell you what, the odds of there not being a greater conflict with Iran in the next 2-3 years is remote. You know, and I don't want to play up the opportunity in war. However, the reality is that we're going to probably see a war with Iran. Nobody trusts them. If you're paying attention to the news, you see that there is a really weird alliance that is formed between Saudi Arabia, the Gulf Cooperative Nations, Israel, and the United States. And then you just saw, what, a $110 billion arms deal, which is a precursor to $350 billion. Saudi Arabia is not messing around.
I mean, there already are, like Yemen, proxy wars going on between Saudi Arabia and Iran.
Absolutely, and absolutely, and you know, you have Iranian military in Syria and Iraq. So
that's true.
You know, I think it's very possible that you see oil prices drift up to $70, $80 a barrel in the next couple of years just on the supply and demand imbalance going away. But ultimately, I think there's conflict, and there's a structure to the conflict that I think is good for us, and I think there's a structure to the conflict that's bad. Either way, oil prices probably have one more big bull market, and I have in market
above
watch
140, above the 140 super spike.
In that direction, you know, hard to know, right? But
interesting.
But I have called, you know, I called the shale boom. That's what got me the gig at Market Watch in June of 2014. I told everybody when oil was 120, it was going down to 80, and it might crash below that. And I talked about how enterprising investors would have some pretty neat leverage opportunities if that happened. By July, I was telling people to sell oil stocks. I shorted the oil stocks right before Thanksgiving of 2014, made a bunch of money in that fourth quarter. I actually shorted oil stocks and the euro. And so 2014 was a home run.
Do currencies, or particularly the linchpin dollar, ever play a role in the way you view markets?
Yes. So the dollar, you know, again, back on Market Watch, when everybody was talking about the collapse of the dollar, I was telling everybody there was going to be a huge bull market on the dollar. Just Google my name, dollar, bull market, and you'll find those articles over on Market Watch. There's a link on fundamental trends to all my articles on Market Watch. But
what are you thinking now, Kirk? I mean, it's been under pretty good pressure here, challenging, breaking down from some uptrends. You think this is a secular or cyclical event in the dollar to the downside?
No.
Trump wants it.
Yeah, and he's not going to get it because the rest of the world will just be weaker. There are natural, economic, geographic, geopolitical, military, I mean, there's just economic, there's just so many factors that make the dollar the strongest currency in the world, no matter what, that, you know, we beat it down as a matter of course to keep it from getting too strong.
Too strong.
Oh yeah, sure. I mean, there's no reason.
That would be deflationary, and that would be more difficult to service.
Absolutely. There is no reason, none, because everybody else's debt is bad too, and they have less ability to pay it. There is no reason why the dollar isn't much, much stronger than the euro, the yen, the renminbi. It doesn't matter. There's no nation on earth, and Buffett talks about this all the time, that has the economic, geopolitical, and everything else strength that the United States has. So we print money, and borrow money, borrow money, borrow money. Why? It's because we know if we don't, the dollar will get so strong that it'll be a major problem. So, you know, can we see the dollar drift down now for a while? Absolutely. But as soon as there's any type of turmoil, what's going to happen? People are going to flee to the dollar. You know, I've been struggling. You know, I know Kyle Bass thinks that the yen is going to collapse and Japan's going to collapse. I agree with him. I just don't know when. You know, and you don't want to root against the Japanese because, let's face it, they're some of the most honorable people on the planet. You know, at least, you know, post World War II. You know, they try to take care of each other. They work their asses off, but they just have such bad demographics, and that's, you know, my thoughts on core foreign investing. That's why I stopped here. You know, these major secular trends of aging demographics, global debt, technological change, climate change, sustainability, a move towards a multipolar geopolitical world, those are the 6 major trends that I'm watching. And the aging demographics impacts everything else. You know,
so are you, you know, I used to interview Harry Dent. That was his main thesis.
Right.
For a bear market was the demographic trends several years ago. Have the millennials trumped that demographic theory that Dent had a few years ago? That maybe they were a bigger force than a lot of demographers thought?
No, I think everybody knew that, you know, because I read Neil Howe and Harry Dent. I've met both of them. You know, Neil Howe's book, The Fourth Turning. If you haven't read it, I mean, read The Fourth Turning, or at least go to the website fourthturning.com, I think it is, and skim what he's talking about. And he's a pretty bright guy, and you know, the millennials are basically our counterweights to the baby boomers getting older, right? You know, I'm an Xer, I'm in the middle, and you know, so for me, I cater to both sides. You know, I'm in what's called a facilitator generation, and the millennials are going to offset a lot of what the boomers are dragging, a lot of the boomers are dragging us down. I mean, there's horrible statistics out there about what the boomers have saved for retirement, and you know, so that's going to create huge social costs. But I'll tell you, the millennials are pretty bright. I have 2 children who are millennials, you know, younger millennials. And I've been in the trading rooms with a lot of them. They're generally ethical. We're not F.C.E. regulated here, right? I can say bullshit.
Yeah.
The millennials have fantastic bullshit detectors, and they are willing to be a little bit Machiavellian. And you know, when it comes time for them to find a way to survive, they're just going to charge the baby boomers more money to help take care of them. And that's the way it's going to be. They're not going to wait for an inheritance that, you know, that the government and the nursing homes get. They're going to say, hey, you need help with this? I'll help you. This is what it's going to cost. And they're doing it in the trading markets. Yeah, they're doing it in the trading markets. Oh, yeah.
Yeah. Like, I mean, Uber, and then there's people that have, they'll pick up your groceries, they'll do this, they'll come and hold your hand for an hour and talk to you. So, thank God for those people.
And you must have younger.
And I hope they have the, Kirk, I hope they have the money to pay them.
Right, absolutely. Let me ask you a question here real quick. You must have some traders who are younger who you can describe as ruthless.
I can describe it as aggressive.
Okay, there you go. I mean, they go in there and they kill it. So to all the younger folks out there, just first of all, I'm a good guy. Leave me alone. But second, I tell people this all the time. I do preach a little bit of the ethics. When you make your money, try not to hurt anybody doing it. But second, spend it well. Spend it on helping the world.
Enjoy and give.
Absolutely.
Don't just charge. So you're going to have to teach the millennials how to give because they're into receiving. I just have one more question. Those are your kids, but I could tell from you that you're a giver. Jess wants to know, as far as an infrastructure play, Kinder Morgan, or do you like defense companies? We've actually, for an FX room, gotten a lot of interest in what you've had to say. And I have to say that it's been a great interview because we didn't stick to script. And we had a discussion about, what's really going on. But I could tell there's interest in here. So what I'd like you to do is show people the best way to contact you, to keep in touch and, perhaps talk to you or receive your letter or follow your blog. Right. Why don't you show what you have and where people can go to keep in touch with you, Kirk?
So the easiest thing to do is just go to my website, fundamentaltrends.com. There's a special on it right now if you want to subscribe. It's normally $199 the first year, $399 renewing. But if you go to my Twitter page, where is Twitter? If you go to my Twitter page and follow it, I have a code at the top, and it's Forever 120 off. Gets you $120 off every year, including on renewals. So the first year is only $79. And then the reason that's important is in the chat room over at Fundamental Trends. Let's see if I can pull it up for you real quick.
So, and Kirk's Twitter handle is just like his name, at Kirk Spano.
Yeah, at Kirk Spano. I have a forum, and I talk to the investors all the time. So, talk about the articles, all kinds of random house stuff. A lot of this you can look at for free. I mean, the research you can't see for free. The Ask Me Anything section, if you're a subscriber, you can ask me whatever you feel like, and usually within a day or so I'll answer. Somebody actually asked me about asset allocation the other day, and I said, well, actually my core is what I have in cash. All my circumstantial holdings are what I have active right now. So the 25% that I would normally have thrown at QQQ, dividend achievers, mid cap and small cap, I don't have anything in the indexes right now. So I'm picking out stocks, I'm picking out ETFs like XES, and that's the sort of thing we talk about here. So if you want to get a hold of me, drop the $79 the first year. If you don't like it, fire me after a year. But I think you'll probably, get something out of it. I'd love to come back and talk more about this because I think some of the questions about the industries are important because I know that that's where the trades are. I do a lot of 3 and 6 months trading using options. Like I told you, I'll sell a put on something I like because if I own it later, that's fine. And then I use the premium to buy calls. So I do a lot of synthetic longs.
Risk reversals.
Yeah, I do a lot of synthetic longs on trend reversal, whatever you want to call it.
Yeah.
And that is where I have made some huge money. I mean, I've had 2 trades in the last year that were up darn near 1,000%, and you turn 5% of a portfolio into 50%. It's a big deal. So,
are you looking for an uncle?
Yeah, right. I tell you what, hey, you had a question, right? Somebody said infrastructure and
Yeah.
so Kinder Morgan, good
Yeah.
company, not a great company anymore. There's long-term problems with the pipeline industry. They might get a boost right now, but long-term, you're looking for an exit strategy, even if you want to be long on the short term. And then what was the other company? It was MLPs.
Or do you like defense companies like Lockheed?
You know, I was in those about 2 years ago, and I ran them up. I got out a little bit too early because they've gotten obnoxiously expensive. So can you trade them to the upside? Sure, but you better be nimble because, you know, you have to understand reversion to the mean. You know, there's just no way that they can stay this overvalued for forever. Now, we know that things can stay irrational a long time, right? So if you've got a great price trend and you know how to read it and you're not married to it, you know, you can trade anything right in either direction. But, you know, longer term, I do think that the big trends go back to these things here. Invest around these big trends if you want to be longer term. And you'll generally make great money. And the nice thing about it, and this is where swing traders get in trouble in my opinion, is they get married to a swing trading idea. They don't look at the fundamentals at all. And when something goes bad, it's bad, right? So at least with something that you also have the fundamentals in your favor, if you trade in this arena where the fundamentals are in your favor, your trade will generally fix itself if you just want to hold on. You know, it might take a year or two, but it'll generally fix itself.
Well, thank you so much, buddy, for your time today and your presentation and talking about markets and individual equities and balanced funds and being opportunistic. So it was a great interview. You said you'd like to come back. It's a deal.
That'd be great.
We'll set that up. Jess is saying that he's going to subscribe and he's trying to find the 120 discount coupon. So you got some business out of it. We're glad for you. You know, Kirk, people ask, why do I interview people that have services that could compete with us? You know why? Because my mission is to build up and edify traders every day. And here at ForexAnalytix, we believe in abundance, not scarcity. So if people find someone they're interested in, God bless them, let them go and sign up with someone who's contributed their knowledge and addressed our community. So thanks again.
Thank you. And
maybe sometime during the summer, we could get back together and see how things have played out.
Right, and I just want to say I completely agree with you about helping folks out. I talk to a lot of trading groups. I've been in swing trading and day trading groups, and I've been watching yours for a while. You know, I think that people need to get that education that you're offering.
Well, thanks. I appreciate that. That's our mission, and I think we've helped a lot of people, as I'm sure you have too, Kirk. So I will now call you my tactical trading warrior brother, and you know, have a great Memorial Day holiday, and let's touch base after the solstice and see where we're at in July or August. Okay, Kirk?
Sounds wonderful. You take care.
All right. Thank you, Kirk. I'm glad I reached out to you on Twitter.
Yeah, likewise.
Okay, buddy.
Take care.
Good hunting.
Yep.
Okay, everybody. So that's Kirk Spano. You have his contact information. Up, he's starting to roll over a little bit. We did get a spike up here in the pound above 40. That may have been it. I don't know if you guys are seeing my screen or not. Are you? There it is. See this spike right here? So I thought we might go to 60. They didn't completely clean out the stops over here, but that's kind of a negative candle. So not a bad area to maybe have a partial on. And I hope everyone enjoyed. Okay. All right. Thank you, everyone. Have a great afternoon. Tomorrow I have a longtime friend of mine who's a great analyst, Jim Walsh, will be with us. good hunting the rest of the day. And I'll see everyone for Turnaround Tuesday. Thank you, Steve Volge, Stelios, and thank you, Blake, and thank you, F.A.C.E community, for your participation and sharing some looks with us today. Adios.